Hi everyone, Louie here. And for those interested in purchasing precious metals outside of the United States, I'm developing a new tool here that could be very useful in timing your purchases. In previous videos, I've explained how the currency exchange rate affects the price of silver metals. And in many countries, gold, for example, is at a high, but it may not be the time to buy. So here, if you believe that gold, for example, is in a bull market, and I do, this would be a tool you could use that would tell you when to buy. All right, and what we're gonna review is gold prices in the United States, the dollar strength versus your currency strength, and whether or not it's time to buy. So when gold prices are increasing, regardless of the strength of the dollar to your currency, you may not want to buy. You may want to wait for a pullback. All right, so we're down to the lower quadrant here. When gold prices are down on a pullback, but the dollar is strong in relation to your currency. In other words, it's more expensive to buy gold, even though the price is down. Do not buy. When gold prices are trending down, when they've got a pullback, and the dollar is down in strength and your currency is up in strength, gold becomes less expensive in your currency as the price of gold in US dollars is down. That would be the time to buy. Okay, I know it's a little confusing, so let me go over to this really great chart I found at kitco.com to show you examples of this. All right, I'll put the link to this chart at kitco.com. I was reviewing, trying to flesh out this concept I had an idea for, which was to plot these, and lo and behold, Kitco does have a chart that plots gold in different currencies. The red line will always be the price of gold in dollars. Gold prices are set in US dollars. And the blue line will be your currency from over here on the left. Right now we're displaying the Australian dollar. Okay, so right now, although gold has been dropping, it's on a pullback, the Australian dollar is stronger. The Australian dollar is weaker than the US dollar, causing the price of gold to be more expensive than the US dollar. Okay, so what we're looking for is for your currency's line, your blue line, to drop below the red line, indicating strength in your currency, and hopefully gold prices are pulling back, and the strength in your currency makes them even cheaper. So if I were looking at this chart and I was in Australia, in spite of the pullback, I would not purchase yet. We're looking for an inversion of the blue line under the red line. Okay, and you'll know that the prices are dropping, but have they dropped enough? Here they've been dropping, but it displays your currency being weaker. Therefore, it's not the maximum time, not the optimal time to purchase. Now we're going to look again for when the blue line drops below the red line. Going over to the British pound, okay, here we have the perfect example. So the blue line dropping, the price of precious metals in your currency at a pretty good low at about 1100 and change sterling. The divergence is maximum, indicating that your currency has strengthened at the same time the price of gold has dropped. To me, that's a buy signal. Okay, and not too many countries can say this right now. Let's keep going. In Brazil, blue line above the red line, that indicates that your currency is weak. Don't buy. In Canada, no divergence. Don't buy. In China, blue line above the red line, don't buy. In the euro, blue line above the red line, don't buy. In Sweden, small divergence, we'll say not time yet. In India, blue line above the red line. So it is not a time to buy yet. We want to look for a divergence of the blue line below the red line, as we had down here about 10 months ago. No, about 4 months ago. We saw that the blue line was below the red line, and gold had not quite made its move yet. But you can see that we had a tremendous move after that, and as long as the blue line remains above the red line, we have weakening. All right, but I think you could see a point where the blue line descends below the red line, which would be a more optimal entry point. In the yen, not much divergence, don't buy. In the peso, no, don't buy. In Russia, blue line below the red line, we have a little divergence there. Might be time to start looking at that purchase. South Africa, no divergence. And Swiss franc, no divergence. So again, going back to the UK, when we see that the pound has strengthened, that reduces the price of precious metals, probably silver as well, because silver travels with gold, in your currency. So you may be looking at 1100 plus sterling as a really excellent entry point, right? Because your currency is strong and gold is on a dip. So that'd be an example that I would really look to right then. Again, looking back to India, Indian currency is still weak. And, if this were to invert, you could see, $100 drop in the value of gold in your currency. Now, if your currency never strengthens, if it's on a permanent decline in value, then that may be a different scenario. But often these currency exchange rates fluctuate based on what your central banks are doing and so forth. So I would hold off in India at this point and look for another divergence like we had back here, where your currency was strong or the dollar was weak in relation to your currency as an entry point when you see this drop down. And of course, we love to see the gold pullbacks. But again, optimal entry point, blue line below the red line. All right, and I can show you a currency chart to explain this to you. Let me get back to the British pound. Okay, so the optimal entry point looks like it's here. Let's take a look at what's happening with their currency. All right, here is the dollar to the British pound. You can see the dollar has been losing value in relation to the British pound. The British pound has been strengthening, and then when we go back, clearly that represents an optimal time to pick up your precious metals. All right, let me know if you like this tool. I will put the link to it below. It was a little hard to find, but I imagine this could be a very, very useful tool to you. Now, the disclaimer, I am not a financial advisor. I'm not giving professional financial advice, only my opinion, and trying to share tools with you that will help you to time when to enter the precious metals market. And I hope you found this useful and actionable. All right, guys, take care, and Louie out.